And I went and had a look. I mean, I think you can, Jacob, if you toggle forward to the chart of the week, right down the bottom, you see their real GDP and S&P total returns, right? Mm-hmm. Well, look at it in, what did I just say? 96, right? So 96 to the S&P went up 23, 97 it went up 33, 1998 it went up 29, and 1999 it went up 21. I mean, man, as I said, it doubled in 4 years.
And the Cape was already pretty expensive in 96.
Exactly. And at 2000 it was 44. Here we are at 36 going, man, this thing's crazy. Well, imagine if it gets... So do you know what I mean? Like, this is the hard part of timing.
Just irrational exuberance.
You just have to say either, and to Tom's point earlier, you have to say, okay, I'm going to seriously rebalance every 12 months, or you say, well, I'm just going to try and ride it as hard as I can, but you've got to be really, really careful.
Yeah.
Right?
You've got to be able to keep tipping money in. Right.
Exactly.
It's a dollar cost average, which is what everyone likes to talk about.
But then, Tom, you miss all the,
I get it.
The dollar cost averaging on the downside.
Yeah.
Whereas with Cape, you wait at 44, January 2001, it's still at 36 or something. You're going, hey, the market's fallen 20%. It's like, yeah, but it's still at 36.
Mm.
Yeah.
Right?
Yeah.
So,
in 2000, 2001, 2002, over those years, we dropped 10%. The next year dropped 12%. Next year dropped 22%.
Yeah.
So you've knocked half your returns out.
Exactly. So you went from 100 in 96 to 200 in 2000, and then from 2000 to 2003, you went from 100 back to 50. Yeah. So in other words, you went nowhere. Mm-hmm. But if you rebalanced every year and said, listen, I'm going to take all the profit or I'm going to take 50%, you've at least banked some profit. And when it falls from 2000, from 100 to 200, if you've sold down, you might have, say, 150, right? Well, it loses 50% of that, which is 75, but you banked, 40, so you're not as badly off.
Yeah, and then you pour your money in, you end up with way more shares than you had the first time
Exactly.
around, and then as it goes up again, you're absolutely laughing.
Yep.